And good day, traders. And good day, traders, and welcome to the XM Live. Welcome to my third session of the day. And guys, today we got some good trades, guys. Originally, gold down, then first up, then down. So we traded gold. Uh, I will actually share the screen right now, so you will be able to see, guys, what's going on here. So first, guys, we got gold long trade, pretty good, guys. Then we got gold short trade, also was good. And now I'm waiting for another short at 43.65. If market goes up, this will be a sell trade, so a slight pullback, which is normal. But also, guys, you can see that dollar yen trades are going down, and dollar yen is basically the trade that I opened. Well, I opened today one more position, but I left my position for literally in the last 2 3 days. You can see here from 3rd of June, literally, right? So this is what I usually don't do, guys, but sometimes you need to do it literally because market was not going anywhere. Anyway, guys, I will leave this trade. Maybe if Bank of Japan makes an intervention, right, or if long traders start to exit their positions, we might get profits. So the primary thing is that we are at 88.6, right? So 88.6, that's a sell counter trend. Of course, guys, this is not trend. This is counter trend trade, selling dollar yen. But guys, it doesn't mean that it will go straight from 88.6. Still, 88.6 is resisting, which means, guys, that the market is fighting the momentum, right? It's a bullish momentum, it's bullish trend. But as you know, guys, we never buy at highs and we never sell at lows. So the primary thing when you trade is to follow the prime directive. What is the prime directive? The prime directive is the first rule of trading for any system, any method, right? At least how I teach traders to do is buy the bottom, sell the top. You buy the bottom when market is in uptrend and it's retracing, so you buy at the bottom. When the market is in uptrend, so it's going up. When the market is in downtrend, so it means the trend is down. You wait for a retracement up and then you sell. So this is effectively counter trend position. So we are selling at the, I would say, 88.6 trade, 88.6 retracement, which is by default the strongest Fibonacci level. But it also means, guys, that we are selling from the high. So we are not buying there. That is a big mistake for all of you guys who are watching me on XM Live and YouTube. You need to understand, guys, that one of the big mistakes, and traders still make those mistakes, is that they try to buy it high in the fear that the market will not actually, they will not join the market. So it's called fear of missing out. And that kind of fear is pretty much, guys, in line with, I would say, one of biggest traders' mistakes. It doesn't mean everyone can feel the fear. Everyone can feel literally the problem to enter a trade or exit a trade, whatever, guys. But fear of missing out is a big problem, and it means that you will be jumping usually in a freight train when it happens. So that's something, guys, that you should be careful, and you should not let your emotions overwhelm you. All right. So it's very, very important. So what it means, guys, is that you should be following, uh, at least if you will like price action. This is for me my best price action method. Megatrend really works like a charm, and definitely, guys, it's something that I'm very proud of, and I really enjoy results. But as you know, guys, whatever the method you trade, the system, you always need to respect the market, because if you don't respect the market will not respect you, guys, right? So basically what you have here is template. It consists of three moving averages, 8, 21, and 89. And also, guys, uh, this is the ATR indicator that I have created, which shows me the direct range for any market, projected highs and lows. And that's the core, of course, with the addition of order blocks that we paint manually and we chart manually. Order blocks are also extremely important levels of support and resistance. And that's something, guys, that I trade all the time, right? All the time, guys, support and resistance. That's very, very important. All right. Anyway, guys, intraday trading is about short-term moves. All right. I'm full intraday trader. These trades on dollar yen, I only left because nothing happened. It didn't go in profit. It didn't hit stop loss. So the reason is that's the only reason I have these trades. So unless I see stop or profit, I will ride it. But what I wanted to say is that intraday trading is about accuracy, right? It's about short-term news, short-term momentum, and accuracy. You don't go for risk to reward when it comes to intraday trading. Intraday trading is not risk to reward, all right? And this is something that I always try to do during the day. I try to close the trade during the day. So we have, for example, here GBP Australian dollar, 98 pips is volatility. I know that when I take profit, it will be between, let's say, 20-30% of the ATR during London session. If I leave my trade during, let's say, US session, I will take more. But there is, of course, a chance that market might reverse. Because today, intraday trading is not like intraday trading that happened, that was actually that we were doing 10 years ago. It's totally different. Today, a London session can be bullish for a market, and then US session comes in and completely reverses the direction. So only if you have a confirmation that it's still same trend, same direction, you leave it for US session. For me, it's pretty much, it boils down to the fact that when a trend is bullish, if there is strong momentum, guys, I will leave my trade for more than 20%, let's say 30, 40, 50% of ATR. But if trend is not strong, actually, if momentum is not strong, then I can take 20% of the ATR. Usually, guys, during London session, we don't have big movements. And usual volatility is around 20%. So it means that if GBP Australian dollar has 98 pips, which it does, our target for, let's say, London market trade would be, let's say, 20 pips maximum, right? So this is something that you need to take care of. Okay, also, guys, look, now GBP gold looks to me interesting also at this price level. Maybe I can sell also here. I can do 0.05 loss. Today we were selling lower, but here we are touching 80. Okay, let's do it. 0.06 lots. All right, small trade here on gold. My stop loss will be placed originally, guys, above this high. So it's 43.55. But there is opportunity that I can short this again. All right. So let's put it at 43.55. But you know, the strongest trade for me today will be here. I will go probably 0.10 lots. Right, so 43.65. But here, guys, now we have the first touch of 21 moving average. So 21 moving average is, guys, one of look, when I created a system, I managed to do a extensive backtesting. Among all moving average combinations, single combination, double combination, 8 and 21 work the best as double combination, right? Regarding single moving average, it is EMA 89. So basically, that's the difference between other moving averages and megatrend moving averages. All right. So what I think is that gold, for example, here, we might have a little bit of pullback maybe towards this level, 43.15, and then market could bounce up and we can get into another trade, 43.65. Even if we hold on to this trade, we can move stop and add one more position. But if I add, sometimes, guys, I do martingale, so I might add 0.12. we will see what will happen to this trade. First trade that we got in morning session went in profit. This second one now hopefully yes, but you see we are selling higher. We are not selling at the bottom. When you sell at the bottom, guys, there is always inherited chance that the market will actually turn against you, right? So you need to effectively always look to sell when the market is higher, right? All right. Okay. Uh, if you have any questions, feel free to ask. Any questions, guys, just feel free to ask. For if you need anything, guys, I'm at your disposal. So selling gold again, let's see. Now we have small profit, but look, I'm not a scalper, right? So I don't trade for 2 points or 3 points. That's only in extreme circumstances when I see that the market is not going my way. I can close my trade a little bit prematurely. But here, when I open a trade, I expect at least, I don't know, I mean, $10 move, which is, let's say, 100 Forex pips. And you can see the initial reaction, right? The point of Megatrend is also to uh, trade the first touch of the level or the zone. And here you see we have the first touch. We have the first touch of 21 moving average. And I think that the market could be going here. All right. I think that the market could be going here. So this is something that I'm watching, and currently I want to take profit. Maximum, I think, would be here 43, 10, 12, if we can get there, right? Don't forget that the US session is active now. So what it means, guys, it means that we have future market open, US future market is open, and full Wall Street open is happening in an hour and 15 minutes. So now you can see the future market is open, right? And of course, what it means is increased volatility, right? So these hours are good to trade, guys. I mean, I like to have sessions around this hour. Why? Because I know that there will be always some good trading opportunity. London is great, but my sessions, first hour of London and second hour of, or actually first hour is Frankfurt session and then London Open is also good. Those are the best for intraday trades. Swing traders or positional traders, they don't care. But me as intraday trader, I need to be there when Frankfurt is live and when London opens. And this is when I also have sessions with XM. Each morning, guys, 9 a.m. platform time, 10 a.m. platform time. We are always talking about platform time. So 9 a.m. platform time, 10 a.m. Those are my sessions, and I trade every single day. So if you want to join, feel free to join all of my sessions, because, guys, I like to trade. I enjoy trading, and I've been in this business since 2010, since 2009, actually, right? Right. So we got some 70 points profit on gold. You see, now there is a question always, should we close or should we not close? Now, guys, look, I would go with a so-called guerrilla trading. It means that if the market goes higher again, I will sell it. If the market goes down, what can I do, guys? I cannot do anything. So now I will take profits. All right. So I just took profits in gold, and I'll do the same thing again. So this what I did now is called guerrilla trading. Guerrilla trading is a style of trading. It's not scalping. Scalping is you open a trade, you wait for the market to move couple of points, you exit. And then you open, you reopen, and you do a lot of, it's like frequent open and close of position, right? And you don't take lots of pips. Here on guerrilla trading is different. It means that if the market goes to the similar or same level again, I can do another sell. So, but it's not like 2 or 3 pips or points. We need a little bit more, right? So we can put 88.6 here. All right. So let's go in insert objects, Fibonacci retracement here. And look at this. This is 78.6 rejection. So you see, there was already a confluence here. And what kind of confluence? Double confluence. 78.6 and 88.6. You see, there was a nice double confluence. All right. So what it means, guys? We exploited higher chance to trade. All right. We exploited higher chance to trade. By the way, I also trade from my mobile. So you would sometimes see me that I do something. I have also mobile session trading, guys, on Wednesdays, and I do trade another XM account from my mobile. So this is something that I like to watch. I like to look at this, and mobile trading is also a big part of my trading hours. Why? Because this is easy to set up on mobile. Pretty much easy, right? All right.